What a day. What a day we are having today swing trading in the stock market. This past month, we're already up $2,500, which is absolutely fantastic. So in today's video, we are going to be talking about the strategy and approach behind it. So I hope you guys all enjoy it. If you guys do, hit that like button, subscribe. If you guys want to learn more about swing trading and trading in the market, check out our school. It's fantastic. We have private live streams, quizzes, lectures. We talk about stocks with opportunity, how to find stocks with opportunity, how to set up your scanners, all of that good stuff. And we have an awesome sale going on for 51% off, which is one of the largest sales we've ever done. Everybody's loving it. So guys, we only have 5 spots left for that code. So sign up before it ends. I'll see you guys in there. And guys, let's jump into this. So if you guys are watching this video and maybe you have a 9-to-5 job, or maybe you just want to become a trader, what are some things that you guys can do beforehand? So one of the things here that we did on Sunday is we set an alert for the stock here that we are going to be talking about. Now, we did this on Sunday. So meaning if you have a standard 9-to-5 job, the biggest thing that you guys can do is to be prepared. Set those alerts, plan out your week. Doing this, check out our weekly swing trading routine video. Having and being prepared is one of the best things that you guys can do as a new trader or as a trader with maybe a 9-to-5 job. Another thing that you guys can do is to journal those trades. So if you guys can get 1 or 2 things out of today's video, 1, be prepared. Set those alerts. It's better to have an alert set and have it go off and go, I'm not trading it, than the other way around, not being prepared, not having that alert go off and missing out on opportunity. Then other thing you guys need to know, journal your trades. Figure out what type of strategy works well for you, what type of trader you are. Doing that will just help you guys out so much. So let's actually turn to the computer and see our more recent swing trade. Let's go. All right, so we're actually in on 3 positions, which is always good. A lot of people think that you need millions of stocks traded every single day to make money. No, you need quality. You should always choose quality over quantity. So let's actually see some of these positions here. So the first one here is actually one that the whole group absolutely loved, and this is ticker symbol VIRT. VIRT was a textbook trade. Looking at the daily stock chart, what do we notice? Heavy support here on this yellow line. This yellow line is what we call a moving average line. It's actually the 50-day moving average line. You guys can see it hit it in the past. We had buying pressure, hit it in the past, hit it again, hit it again. So now here, what we saw here was this huge sell-off from $41 all the way down to $36. Some people get fearful of sell-off, not me. I look at sell-off as opportunity. Now, the next thing we do is we look at the RSI. The RSI was trading for about a 40, which could be a little high, but one of the things that you need to look back at is previous history, because history tends to repeat itself. So the last time it was trading for a 40, it was back right here. And what happened? Huge buying pressure. Previous to that was back in here, and we had good buying pressure. So we know we have this. We have a stock on an upward trend. It's sold off down to the 50-day moving average line, which is a recent support for the stock. We also know it's undervalued on the RSI. What else do we look for? So we don't want to just place a trade off this, right? Some traders do, but for me, I want to look at other time frames. I want to try to get in on some sort of confirmation of breakout. So looking back at like the hourly chart here, this is what we saw. This general downward trend, and if we remove these moving average lines, you can see it a lot better. We had this huge breakout here where the stock broke out above this trend line. Now, what you could do is try to figure out the new trend. So what I did is tried this. We saw the trend like this. So my thought process was this. Okay, we can enter on the breakout of the trend line, keep our stop below 36.26, which is the low down here. We'll keep our stop loss just a little bit below that. So if it needs some support, if we do get some sell-off, we have a little wiggle room to make money. For a possible push back up to 41. Yes, and I know the target is red, right? I know the indicator, some people get so mad at me that the indicator's flipped. I don't care. That's how Moomoo has it preset, so we're going to leave it. Now, you guys can see, right, keeping our stop here about 2.9% from its current price. What this does and why I love this good risk management tool that Moomoo offers. I'll put a link to Moomoo down below. If you guys want to sign up, it's completely free. It's completely free to use their service. And another thing, if you just want to use their charting and use the broker for another broker, you can do it. So, all right, if you guys were starting out with like $100 and you guys took a trade a week, risking that 2.9%, which is the risk that we had, 2.92, risking $1 to make $4.58. At the end of the year, right, even if you're a terrible trader and your win-loss percentage is 30%, at the end of the year, guys, your total account balance is $255. So you've more than doubled your account with just good risk management. That's why good risk management is so important. That's why planning out your trades is so important. That's why having this tool is so important, is because you can make good money off that. All right, let's look at another trade here that we're in on. PWP. What do we notice? It's a very, 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 very similar approach here. General downward trend, great breakout here, even if we pull up these moving average lines, kind of hugged around that 90-day moving average line, and it pushed up above the 200. The next stop is for it to hit the 2660 mark, but look at the daily. They're very, very similar. Great upward trend, undervalued RSI, heavy support here on the 90-day moving average line. So the main difference between the yellow and the blue is just strength levels. So meaning that the yellow is the 50-day EMA line. It's going to be a weaker support, weaker resistance than the 90. Ideally, you want to trade on the 90 or the 200, but at the end of the day, as long as you have a good checklist and all the other parameters are checked off, you can place trades on almost any moving average line. You just got to make sure there's confirmation and other indicators in your favor, which is exactly what we have here. Now, the last one here that we're in on is Google. Google is just a huge sell-off opportunity. It sold off 7% on the 90-day moving average line, just kind of taking advantage of the sell-off. There really was no confirmation, just kind of enter the stock here. So this past month, guys, off of some of these trades here, we're up about $2,500, which is great. And look at this. Performance by strategy. The breakout strategy is the winner. This is why having a good trading journal, I'll put this down below. It's like $20 for you guys to get this. You guys can break down your strategies, figure out what type of trader you are. It's like $20, so check it out. But guys, that is it. Hope you guys enjoyed it. If you guys did, hit that like button and subscribe. And don't forget code TRADER for 51% off our school. I'll see you guys in there. Hope you guys enjoyed it. Like, subscribe, and I hope you guys have a great rest of your day. And take care, everybody. And remember to stay profitable. Take care, guys.